Good morning, everybody. The day before yesterday turned out to be a bull trap. It was an impressive green bar. You can see different degrees of it, S&P there. And yesterday's gap down, which we in the morning assumed, hey, this looks like it's going to be a bull trap, and the selling continued. And they got to close under the 50 MA. At the moment, prices are just hanging there. I guess the institutions holding their breath as to whether the next shoe is going to drop. The FOMC minutes are at 2:00. Unlikely they're going to say anything that we don't know, but be aware that that news is coming out. The industrials broke down. Notice the topping tail there. That's a breakout failure. That was a heads up. We still need to see it break the support. That was a heads up that it was likely to happen. Sellers on the rally. Tech led the way down. So it held up relatively well yesterday. It was only an inside day. So a little bit of a good sign, but that broke the 50 over a week ago. It hasn't reached this support level yet, which is about 10% down. It'll probably get there now that this is rolled over. This is S&Ps are under the 50 MA. Financials broke down yesterday. Excuse me. I said, that was one of the keys to the market getting weaker, was the financials beginning to give it up, and they did. It was the gap down. They held the converging 50 and 200, red being the 200. And energy is up against resistance, which we covered. So totally makes sense that the crude oil is XLE hasn't reached that pivot yet, but crude oil is up against resistance, which we'll look at. So it made sense for this to begin to pull back. There'll be buyers on that pullback. Not industrials, consumer staples, interesting. Defensive breaking down. I think that's a little bit more of a concern, that they're not going for the defensive stocks. They don't want anything, except, interest rates are going up. Sell bonds, sell equities. So kind of bearish for, the strength that we've seen previously for so many things, defensive things, to be getting sold like that, breaking down under the 50 and the 200 and extending lower. Healthcare is still holding up pretty well. That looks like it can go higher. These aren't going to do well while interest rates are going up. This real estate, these REITs and utilities, they're breaking lower. Consumer discretionary rolling back over here, closed under the 50. And materials breaking the 50. It's bearish. We said this was coming. We said at the time, we don't know the day, but I mean, it's interesting how these things play out. It always is. And as far as tech goes, the day we started saying, hey, risk is growing, was right here. And some things went up further, other things went sideways, but here it is. And now it's got to play out. We're not there yet. Is XME there? XME is not in here. Hold on. We can go look at XME. That's metals. And I think that started to break down too. So that didn't break these lows, but you can see the topping pattern, McGraw. It held the 50 unless it has some kind of a miracle flip up. So you got to look at copper is one. That's breaking lower. Gold has been holding up a little bit better, but that is sitting here on support. So that's been coming down. Copper's been coming down. I don't know how much aluminum is in there. Breaking down, bad sign. Steel holding for the moment. That's probably just because of X, but that gap down. FCX held at 200. So I don't have XME. I don't think that's got any chance of holding up either. Pretty much everything's in lockstep to go down to some lower price. Now the transports, the ETF, that's holding the 50, but that broke this pivot. It broke this pivot. Now, if we look at not the ETF, but this one that broke down. That closed under the pivot. So transports are breaking lower. Interest rates are still going up. You can see they're kind of flattish here, but as they're going up, that's one of the culprits. And the dollar going up, interest rates going up. We talked about that way back here, that this was going to be a problem if the dollar started to go up. And the 10-year, that was starting to inch up. It's up here at this resistance. So, it'll play out. Weekly charts are still in uptrends. Monthly charts look pretty decent. So as things correct lower, we'll see how far down they go, and then look for things to reverse. There's no FOMC interest rates this month in September. So whenever economic news comes out, it begins to influence, I guess, decisions and market jiggles and what have you. So SPY moving a little lower this morning. It's down. I took the line away from minor support. It broke that. It's under the 50 MA. Next target is down here as this major support area. 440 may come into play for, just SPX and some open interest in options. Maybe bounces off of that, but ultimately coming down here, to a technical level where buyers will give it a shot, which, as I show you, is around 5% correction, which is what, bullish market moves in prior to 2022 have ended right around there. So we'll see when prices get there. And if our internals give us a heads up, which they're not yet, this is now down minus 200. That's good. It's possible this could go down to a minus 300 or so as this begins to push lower. And we want to see this sentiment push into these lower bands at that time. And then we start looking for, instead of breakout failures, we start looking for breakdown failures and a bottoming process to begin. We still got September to deal with, but, we'll get there. We'll get there. And right now, we're looking for this to come down somewhere down in this area. SPX has been holding up fantastic, meaning not going near the strikes that we have wanted. And so today down here, maybe it's even a little lower by now. 4380. 4380 is good. So you got major support. Even if you have a, oh my God moment, if the markets are going down, buyers are going to step up there. So if it does continue to drop, but I think it's unlikely you're going to get better than 4380 today, since it's on this pivot. And, what's coming out between now and the FOMC minutes to really drive the markets, other than just people, whatever their intentions are to trade or want to get out of things because of, yesterday's breakdown. And 4480 up above, which now maybe has to come a little lower since markets have moved down a little bit. Yeah, 4480, that was only 45 by 50, so 4475. And that's, at the top of yesterday's range, and we're only, whatever, down here. It's a lot further down here than it is up there. So the preference is down here, even though it could start falling, I even say halfway down there, or 4,400. But it isn't likely to go through it. And I don't really see the reason why prices are going to rally back up today either and negate that, especially since they're inching a little lower as I speak. Futures. Come on. Anyway, yeah, starting to break lower. I mean, it could be a dead day, wide range bar. This thing could just jiggle around in here while we wait for the FOMC at 2:00. It's a wide range bar. The consolidation. It's bearish. like unless it can negate this red bar, close back above the 50 MA, you got to assume it's going down. Test this pivot, which is right at 4,400, give or take, coming down here. So lower. And Qs hanging on like tech for the moment. They're hanging on to this support. Send an alert there. If it breaks, then down to the next pivot level, which isn't too far away. So that's good. We'll see if it stops. YM. It's got the wide range bar yesterday so far in the bottom of the range. There's the topping tail. So the clues of the correction that was unfolding, the first rejection, then you get a green bar getting ignored, and then a topping tail on the breakout, the failure, and now breakdown. And so it evolves into more being convinced that the correction is really happening this time. And it has to come down to wherever it's going to come down. And it begins to get some turnaround, and it isn't there yet. Russell breaking down. There you go. It's had support, bottoming tail bar, wide range bar down. So keep an eye on KRE, which kind of bouncing around here. I think I shorted this yesterday. I think Dan put KBE in the letter, or some did KBE, which they kind of move the same. I guess they got a few different banks, but they both look like they need to touch the 50 MA. So again, financials moving lower, and KBI, that's just flip-flopping around. But if this begins to break lower, right, biotechs begin to break lower, and you got regionals breaking lower, the Russell, it has to go lower. Only thing that could hold it up is some oil stocks, but now they're starting to correct. So since crude oil came to the top of the range, which means everything could be moving lower. That's gold. There's crude oil. Came to the top of the range, it's pulling back a little bit. And but XLE, which we looked at, that's kind of nasty, kind of a gap down. But so if you got oil and biotechs and regional banks moving lower, IWM doesn't have a chance. And gasoline moving up, back off a little bit here. That looks like it's going to go higher in oil, and so interest rates going up. I guess this is what they call Bidenomics. Bitcoin, just, I don't know, look good. Now it looks kind of neutral, but it's just hanging there. So the short end of the long story is correction continues to unfold. It's not completed yet, and it looks like it needs to go lower. So we'll see how that all takes place, and of course the individual stocks that'll play out. And in a few weeks, we'll be talking about what was showing relative strength and weakness, and so on, and finding new long opportunities. All yours, Dan.
Good morning.
Oh, wait, Dan. Someone asked, is Tesla oversold? You know how I love that word. It's meaningless, John. Oversold is meaningless. You put your indicator on there. As long as this keeps going down, you might put some stochastic whatever, might show you oversold, but there's no support, there's no reversal. Just wait for it to some kind of a turnaround. Forget the indicators.
Well, and I'll add to that. Let's answer what we know, what he's really asking. And he's asking, Well, it's one of two things. He's asking, is it oversold where I can buy it because it's down so much? Or he may be protecting profits. I don't know which, but I would say absolutely not. Is it, the implication is it ready to bounce from your question? I mean, maybe on a day trade, sure. And the reason I say that is this is what we call bearish price action. It started with an igniting gap lower, going sideways, green bars ignored, can't bounce, 20 MA rolling over, closing breakdown, bar by bar analysis is very bearish. The void, Greg said, sure, it's gapping down a bit here today, but its destination, I think is 215 to 220. So no, that is not a bullish pattern. So again, I don't know your exact question, but hope that helps.
His question was it oversold? And
No,
said
I know.
meaning his word.
I know, and I'm saying I'm trying to answer his true intent. So yesterday, 15-minute chart here. This is why I like waiting into the close. And this is exactly what I said in the green room at 3:10 yesterday. I said we have a descending triangle on the 15. We have a bearish daily. And I didn't want to consider any bullish positions. I said, particularly if the market sold up into the close. And there you have it, exhibit A right there. Actually, could have been a little day trade short there. All right, let's go to earnings. I don't have any alarms going off for our opens. This is still a pending.
Yeah, and hold on a second. Maybe we can help John here. So he shared with me in the chat. He's looking to protect profits of puts that expire in 2 weeks on Tesla. Tesla's gapping down. So you can add to this, Dan, but when the volatility goes up and it's gapping down, it might be a very opportune time to take half of your profit and see what happens with the rest, because it's gapping lower to 220, 228, and that's going to spike some of your premium, but it could go lower. So don't pin yourself into all or none. Maybe kill half of them if you can.
Oh, without a doubt. But I would say 5-minute high for half. I mean, maybe it can't bounce and it falls another couple dollars to get out of half. But yeah, see, I was trying to answer his question, but yeah. All right. I had an alarm on this go off, but I don't see any prints. But this is a nice 1, 2, 3, 4. So it's good to go. It's posted. All right, Jose. So that's, we had this discussion. We always like to trade with the broader market, sector, strength, weakness, etc. And then if we're trading against it, is it quality enough to fight the broader markets? And I think this one is. Breakdown failure, kind of inverse head and shoulder, wide range igniting breakout, 1, 2, 3, 4. It's not going to trigger unless demand is overwhelming supply. So I love this pattern. GLDD, Jose is asking about a couple here. GLDD, we're already in. This was actually one that we bought in last weekend's letter. So yes, it looks fantastic, even as a new trade, provided the markets aren't in a bearish mood. KTB. I don't like that it's up 4 bars. I'd rather pull back ANF. That's strong. We got a lot of retail. I'll put it on the list. I like that igniting closing breakout. Retail sales came out yesterday. There were some housing numbers today that looks flat. Algen, you're asking about, we're in this one too. Today's Wednesday. We entered Monday. Deep buy setup here. So again, you know, I wouldn't, we're in trail mode, locking in a profit, but I would wait for the broader market strength on that. Coin I posted. This is another deep retracement, buy setup at the 50, buy setup weekly. And I've been watching this for a turn. There's no turn yet. Today's gap up 30-minute high will be that turn. As long as it doesn't rally too much, I like this as a directional and a put spread. Well, whenever I give a directional, it's a candidate for a credit spread. All right, NU. Okay, do you remember in the green room? I said this is a candidate to trade up or down if I get an igniting gap up or down. So that's gapping up. Let me I have TSIM on the other computer. So this is a beautiful gap breakout. Let's just see what it does in the first 10, 15, 30 minutes. On this TSEM I had there. Whoop. Intel said they're calling off the love relationship with TSIM, and I guess that was priced in. Look at this nasty downtrend. Look at these moving averages. But now it's gapping down $4. It's still bearish pre-market, but I'm putting this on my list for a possible put spread 30-minute high. See what it does. Now, PD Duck asking about AMAT earnings August 17th. It's a big fat neutral. There's no pattern here. It's a 1, 2, 3, but it's a deep retracement. You have that gap. It's 15-minute downtrend. When you say it has earnings, I don't know if you're asking me you want to do an earnings trade, and if so, you got to tell me what type. But there's no interesting pattern there. Let's see. And you're asking about AMC daily chart. It got creamed with a judge decision with the APE shares. You know, 30-minute high day trade. That's just junk. That doesn't interest me. Let's see. Coher is getting whacked. We'll come back to that. DLO earnings. That's a big old gap. This thing has run from 1250 to 20. 30-minute low would be a call spread candidate. Oh, look at this HE. I've been watching this Hawaiian Electric. I'm gonna, when this thing stabilizes, I'm gonna sell the $12.50 puts that expire this Friday. They're 45 cents. Massive. This is just dumping, still in a downtrend. So there's nothing to do yet. But you know, sometimes I have a big old list of things that have been creamed that they're still not ready. I got a big list. Pod, look at that. No turn yet. Said G, no turn. EEFT, no turn. Things have been killed. But I'll watch them. Well, to give you an example, I'll show you one that did turn, like GNRC. This was one I was watching, and look, you see how this is a beautiful 3-bar turn, or 5, you know, whatever. So I'm trying to sell a put spread on that, but they sucked it out. All right, A alpha 122. Gap in here, we'll come back to you. Herb, gap breakout, we can watch a pullback. Hava, 49.30. Put spread idea. Put spread idea. Let me put that in another chart. Data up a little, no pattern. Record flat, no pattern. Mercy. 30-minute high. Put spread idea. Mercy. Learn gapping up over 10%. The gap's too big. I mean, look, it's just common sense. Look at the size of that gap. It's a bullish pro gap, but remember, a pro gap doesn't mean it's tradable. Jack Henry, 150. That's a nasty gap. Jack Henry, is that trucking? I think. I forget. JKHY. No, technology. Jack Henry, technology. All right, that's a nasty gap. Putting that in a pattern in a window. I got coin in the other computer. JKHY. All right, or TJX 8860. That's a gap breakout. Put spread idea on a pullback. Target is not a breakout yet, but it's that's, I would call that a pro gap. You know, gapping over all of these bars, leaving that as a nasty downside shakeout. So that's a beautiful put spread idea if we can get any juice. JD, this is the second biggest Chinese retailer. No pattern, we'll come back. Look at that, look at the tails pre-market. That thing's whipping around all over the place. We'll come back. Gapping down, 1250, no interest. Eat, no. Down a lot, no pattern. All right, those are all the earnings stocks. ANF. CPB, yeah, that's a continuation pattern, Thomas. Wow, that's kind of like Greg was saying, even the staples here getting whacked. NVIDIA put spread, yeah, we've been saying that the last 2 days, if there's juice. CNK, no, that is not a 1, 2, 3. Stephen, no, because this bar is a big old tail. So yeah, Messi is right. It'd be a good put spread. Yesterday's low. Yesterday was a nice wide range bar. RSG. Why am I looking at you? It's a closing breakdown. FI. Oh, these are on Sam I Am's list. That's why I have them here. I liked them. So yeah, these are, yeah, these are Sam's short ideas. Guild was a long idea. I set an alarm. GPC. Roger emailed me if this was a good short, and I told him because of this tail, I would prefer a 1, 2, 3. All right, Expedia, look at NU bottom right coming in hard. So like 47. This is Expedia call spread. $16.